Good morning, children. We are going to start with our video lecture, and I request you all to study this video carefully till end for a proper and complete understanding. So today we are going to start with a new chapter, that is chapter 6 from part 1 of your textbook, that is retirement or death of a partner. We'll have introduction about this chapter, we'll discuss about the weightage, and we're going to understand the important concepts of theory which are necessary for solving a long sum. Let us discuss about weightage. The overall weightage of this chapter is 9 marks, of which is 1 MCQ and a long question which is of 8 marks. So the total weightage of this chapter is 9 marks. Previous to this chapter, we have learned chapter 5, which is quite similar to chapter 6. The long sums that we have understood while learning chapter 5 are closely similar to the long sums of chapter 6. We are going to have an introductory idea about chapter 6, that is retirement or death of a partner. Now, generally speaking, what is retirement? It is a separation, and in context with this chapter, it is separation of a partner from the firm. So let us see the definition as per Indian Partnership Act. The very first point, as per Indian Partnership Act 1932, when a partner retires from a firm for any reason or a partner dies, the partnership ends, but the firm is not dissolved. Now, for a better understanding of this definition, let us consider a simple example. Say, for example, there are 3 partners working in a firm, that is partnership firm. Let us name these 3 partners as A, B, and C. Now, C is the partner who is going to retire. That means C will no longer continue with the firm. I repeat, for understanding this definition in a better way, we have considered an example that there are 3 partners A, B, and C. C is the third partner and is a person who is going to retire. What does that mean? That means C will no longer continue in partnership firm. So who are the partners who will continue the existing firm? That is A and B. Now why did C retire? There could be any reason behind the retirement, or say the partner died. So what does that mean? That the partnership with C has ended. That does not mean that the entire firm has dissolved. Only C has been separated from the firm. A and B are going to continue the firm. So we'll read the definition again. We had an explanation, so now it will create a good understanding. As per Indian Partnership Act 1932, when a partner retires from a firm for any reason or a partner dies, the partnership ends, but the firm is not dissolved. The firm is not closed. The firm will continue with the remaining partners. Second point, remaining partners can continue the firm and business. We have already discussed this. Third point, for this purpose, necessary accounting treatments of retirement are required to be given in the books of the firm That is, partnership form is reconstructed. Now, reconstruction of partnership, we have learned this very well in chapter 4. What is reconstruction? It is changes taking place in the partnership form due to several reasons. So, what is the reason behind changes during now? It is retirement. Just like when the new partner is admitted, various changes take place regarding the partner brings amount of capital, goodwill, etc. etc. Similarly, while going through chapter 6, while understanding the concept of retirement, various accounting treatments regarding retirement of a partner are to be given, which is a part of reconstruction of the firm because several changes are going to take place. Earlier there were 3 partners, A, B and C, and now there are only A and B. C has retired. This is a practical example that we are going to consider during the entire lecture. Now let us talk about the circumstances of retirement of a partner. Here they are trying to say that what are the circumstances due to which the partner under which the partner retires. The first one is as per Indian Partnership Act. Under this, various points such as death of a partner, by contract, by notice, any partner can give prior notice to other partners in writing that his intention is to retire from the firm. So these several points are covered under Indian Partnership Act. This concept is given in detail in your textbook on page number 216. The second point about circumstances of retirement of a partner is voluntary retirement. Voluntarily, a partner will retire. This may be for some of his personal reasons. But an active partner is required to give public notice regarding his retirement. That simply means that if you are willing to retire from the firm voluntarily, मतलब आप अपनी मर्जी के हिसाब से अगर रिटायर हो रहे हैं, then too it is required that you give public notice regarding your retirement. All right. Now we have an important topic, that is accounting treatments. This is important accounting treatments which take place during retirement of a partner. These are the points to be understood very well while solving a long sum. The very first point among this is new profit loss sharing ratio, gaining ratio. Actually, here they are trying to say that these many aspects we are supposed to consider, and on this basis we are supposed to give necessary accounting treatments. So overall we have to understand 6 points, 6 accounting aspects for a better understanding and a clear understanding for solving a long sum. The very first topic is new profit and loss sharing ratio and gaining ratio. This, of course, is not a new topic. This is not a thing that you hear for the first time. We've heard this in chapter 4 as well as in chapter 5. You know very well what is the formula for new profit and loss sharing ratio and gaining ratio. The second point is valuation of goodwill. The partner who is going to retire will be given an amount of goodwill by the existing partners, just like the new partner when he or she is admitted in the firm. I'm talking about chapter 5. Whenever a new partner is admitted, the partner is supposed to bring premium for goodwill in cash. Yes. So similarly, now if you consider this aspect with chapter 6, here the situation is opposite. The partner is going to retire. So if the partner is going to retire, that means partner should be given his share in goodwill. Why? Because the partner has contributed in partnership form by serving the same. The third concept is a very common concept. It is revaluation of assets and liabilities. This concept also we've understood very well in chapter 4, as well as it is also mentioned in chapter 5. We'll go in detail one by one. Let us consider the fourth point. It is accumulated reserves and balances of undistributed profits and loss. This concept even we have studied in chapter 4 as well as chapter 5. Still we'll have a detailed idea about the same further. Next point is determination of amount payable to the retiring partner or deceased partner. This is, you have to calculate that how much amount is payable to the retiring partner, the partner who is going to get separated from the firm. Yes, so he must be definitely having some of his share in the firm, because so far he was a part of the firm. So at the end, you have to calculate that how much amount is payable by the firm to the retiring partner. Yes? Now the last and important point, it is related to fifth point. In fifth point, we've understood that the share is payable to the retiring partner. Now sixth point is, how do we pay? How much amount is due to be paid to the retiring partner or deceased partner, and in what manner it is to be paid. Yeah, so these are the concepts that we are going to study. It is important to understand before we proceed with long sums. When we'll be doing long sums, all these topics will be considered. So it is a request that you understand them carefully for now. So how do we calculate new profit and loss sharing ratio and gaining ratio? Of course, you know very well what is the formula for new share. It is old share plus gain. And what is the formula for gain? It can be easily obtained from the first formula. If you know one of the formulas, then it is easy to find out the formula for remaining things. So formula for gain, it is new share minus old share. It is necessary that you memorize these formulas. Alright? So new profit and loss sharing ratio and gaining ratio can be calculated as per following circumstances. Now, which are these circumstances? These are the ones which are to be applied in your long sums. Just like we were doing chapter 5. What was compulsory to obtain in that chapter? It is that you will find sacrificing ratio anyhow. Yes. So in this chapter, you have to obtain gaining ratio anyhow, or else new profit and loss sharing ratio if it is to be applied in any of the adjustments. In short, things are related. So these are the circumstances. They'll be applied one by one in your long sums. Though we have several short sums in the chapter, but as I said, as I always do, short sums we are not going to solve separately because they are already a part of long sums. So they can be learned along. Alright, let us consider the first point. When gaining ratio or gain is not given, means old ratio is continued. That means that if you are not provided in the given question, if you are not provided with the necessary information for obtaining gaining ratio, that means the old ratio itself is continued, or else we can say old ratio itself becomes gaining ratio. Then, when gaining share of continuing partners is given. Now, what does this mean? Continuing partners. Let us consider our example, which is of three partners, that is A, B, and C. As I said, C is a person going to get retired. So, who are the continuing partners? It is A and B. So, A and B are the partners who are going to gain. So, how much gain is received by which partner is directly given in the sum. See, this is similar to chapter 5, and also I can say a bit opposite to it. Whatever points we are understanding right now for gaining ratio are all the points we understood related to sacrificing ratio. Yes? So please keep these things in your mind. As I have always said, if you are not aware of the previous chapters, then it is difficult for you to understand current chapters. Always develop a habit of practicing previous chapters because they are all related. Alright, third point. When gaining ratio of continuing partners is given, you are directly provided with the gaining ratio. So there is no need of you to find it again. It is directly given. On such basis, you can find new share easily. The formula for which is old share plus gain. Fourth and last point, when old and new profit loss sharing ratios are given. Things are simple then. In the given question, you are provided with the old ratio of partners as well as new ratio of the partners. So how do you obtain gain in such circumstances? It is very simple. New ratio minus old ratio, that is new share minus old share. Alright? This is just a part of theory. Please try to understand these concepts when applied practically while solving a long sum will be more helpful and will make a clear understanding. Yeah? Okay, let us see what is the next topic. Yeah, this is the second point. Accounting treatment of goodwill. An important point. Let us start from the first point. On the death or retirement of a partner, continuing partners receive profit and loss share of the retiring or deceased partner. Just like when the new partner is admitted, partners sacrifice. Here, partners are going to receive his share of profit. Why? Because instead of 3, there are only 2. So the profit of the firm will be distributed among 2 partners instead of 3. So to compensate this, I'm reading the second point. To compensate this gain in profit, continuing partners give the retiring partner his share in the firm's goodwill. Yes? So the retiring partner is going to get his share in the firm's goodwill by continuing partners. Yes? Now why? Because the retiring partner has contributed in the partnership firm when he was a partner. Yes, the firm's goodwill. What is goodwill actually? It is reputation. So A, B, and C, the example that we have considered, they have contributed in building the reputation of the firm. That is goodwill. So now if C is going to retire, C is entitled to receive his share of goodwill because of his contribution in building goodwill of the firm. Fourth point, retiring or deceased partner will be given his share in the firm's goodwill by continuing partners in their gaining ratio. What was the ratio in chapter 5? It was sacrificing ratio. The new amount brought will be distributed in sacrificing ratio. Now consider the reverse case of this. The partner is going to retire. Now A and B will give his share, the share of C, in their gaining ratio. These are really important points. Last point, old goodwill, if any, appearing in the old balance sheet should be written off by debiting all the partners' capital accounts in their old profit loss sharing ratio. No gaining ratio, no new ratio. Now, which is this amount of goodwill? It is the one mentioned in the balance sheet. Which balance sheet? The balance sheet which is given to you in the question. Just like we had questions in chapter 5. It is given on asset side. Yes? So that particular amount is the old value of goodwill and it is to be written on debit side of partners' capital accounts. In which ratio? In old ratio. Alright? Why? Because the old partnership is dissolved. Now there are several changes. Why? Because C has retired. So partnership firm is going to get reconstructed. Therefore, the old value of goodwill is to be written off among partners. That is, it is to be written on debit side of partners' capital accounts. Alright? Let us understand the journal entries for the concept of goodwill. The first journal entry is about the old value of goodwill. Which is the old value of goodwill? It is the one mentioned in balance sheet. I just explained. So in this case, all partners' capital current accounts will be debited to goodwill account. Being old goodwill written off among all the partners in their old profit loss sharing ratio. You know the posting for this very well. If you want to post this journal entry in partners' capital current accounts, what you're going to write? You are going to write on debit side to goodwill account with respective amount in the column of all the three partners. Yes, you used to write this amount only among two partners in chapter 5. Why? Because there were only two working and the new was going to get admitted. Here there are already three. So goodwill is to be written off among all the three partners. Please understand the difference and do not mix chapter 5 and chapter 6. Alright, let us see the next journal entry. Share in goodwill of retiring partner. This journal entry is about the share of goodwill paid by continuing partners, that is A and B, to retiring partner. Yes? So just because A and B are going to pay, their capital current accounts will be debited and the retiring partner's account will be credited because that partner is going to receive the amount of goodwill and the continuing partners, that is A and B, they are going to pay. This is the reason their account has been debited. It is very important for you to understand these journal entries as well as memorize the same. Let us read the narration. Being goodwill given by the continuing partners to retiring or deceased partner in their gaining ratio. Never forget this. It is always to be given in gaining ratio. Alright? Fine. What is the next topic? Let us see. Yes. Revaluation of assets and liabilities. This is a very common topic. We have studied this in detail in chapter 4 as well as chapter 5. We have important points here. Let us start with the first one. Increase in assets and decrease in liabilities and provisions is credited to the revaluation account. I am not going to explain these points in detail because we have already done this in previous chapters. But let us quickly read for the sake of revision. Decrease in assets and increase in liabilities and provisions is debited to revaluation account. Net profit or loss of revaluation account is distributed among all the partners in their old profit loss sharing ratio, an important point. Then in the balance sheet that you prepare, in that particular balance sheet, they say assets and liabilities will be shown in the new balance sheet at their new values. Of course, we know this. We have solved a long sum in chapter 5 and we used to write all the new values of assets and liabilities in the balance sheet. Yes, even if the value of an asset has decreased or increased, we used to deduct or add the same and we used to present the new value in balance sheet of all the assets and liabilities. Yeah, so it is important that you revise this concept from the previous chapters. Yes. Next, it is distribution of accumulated profit, loss and reserves. Now, as you know, this topic even is not new. We have done this topic in chapter 5 again. As I said, the sums are closely related. They are nearly similar only for the minor changes. The situation only is opposite, that it was admission, now it is retirement. All the other accounting treatments, they are nearly same. So this concept even is similar to chapter 5. But the only difference is that you are going to distribute the reserves and accumulated profit losses among all the partners instead of only old partners. Yes, this will create a better understanding when you go through that particular topic again. Yes, and that you are going to do in your homework today. This is also an important concept and it is not new. That is the reason it has not been explained in detail again. You can go through in your textbook and understand it well and consider this point. Keep these points in mind and make minor changes. The only important change here is in the last point, that you are going to distribute among all partners. You can see here a last point I'm reading, instead of old partners. That means A, B and C, all the three. Yeah. Then determination of amount payable to the retiring partner. These are the points that we are going to understand in detail in the next session. Obviously, I'll explain in detail. This is about that what is the amount payable to the retiring partner and in what manner. Yeah. So it is to be paid in cash or it is to be kept as loan. We are surely going to discuss this point in the next lecture. For today, let us consider what is your homework, because we are going to end our session soon. I will surely explain this point, the previous point, the amount payable to the retiring partner in detail in the next lecture. Alright, so this is your homework. You should go through the entire video carefully and do this homework compulsory. And we are going to meet in the next lecture soon. Till then, stay home and stay safe.